Good morning. Welcome to Stock Market Today. It's Friday, September 20th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider delivered to your inbox every trading day before the market opens. U.S. equities were a little changed in Thursday's trading. Stronger in the morning, but selling off through the afternoon. Healthcare, utilities, and REITs outperformed on the day. Treasuries were unchanged to slightly weaker. Dollar was weaker versus both the yen and the euro. Gold finished down 60 basis points, and WTI crude settled up 30 basis points following a two-day pullback. As we get to the desk this morning, S&P futures are up 20 basis points to start the final trading day of the week. Asian markets were mostly higher overnight, as most benchmarks posted gains led by India. European markets are trading flat. Treasuries are slightly weaker. The dollar is flat on the major crosses. Gold is up 30 basis points, and WTI crude is up nearly 1%. Let's dive in. Take a look at the chart here. We've got a tight range below the all-time highs. It really has been, if you look on a closing basis, it's really been a pretty tight trading week. Little bit of volatility here and there, but for the most part, tight closes just below all-time highs. Support still in the 2,900 to 2,950 zone. Resistance, we're there again. 3,000 to the July highs at around 30.30 is really a resistance zone. We've been struggling to gain much traction as we trade into that level over the past, call it 5 or 6 trading days. Now the RSI is continuing to move higher with price, and Chaikin money flow is bullish and continuing to move higher. So the indicators are in line. Odds favor that we are going to take out the July highs, which has been our view for a little bit of time now, but I do note just the tight trading, right? Some indecision playing out just below the July highs. Continue to watch support. Any kind of pullback, we want to see it hold that support zone. And at the same time, we want to see the RSI hold above 40, ideally hold above 50. That would indicate that momentum was holding in bullish ranges. So continue to watch that for direction on the S&P 500. As far as we're concerned, from a strategy standpoint, a lot of the key themes and relationships that we've been in favor of continue to outperform. And after some counter trend moves, have started to reassert themselves today. And that's really the crux of my note today. So let's dive in. Futures S&P 500 gave up early gains to close near the lows on the day. Don't love that they closed near the lows, but we are seeing a bit of a lift here this morning. Oil volatility continues following the weekend attack in Saudi Arabia. A lot of commentary, a lot of moving parts, people trying to figure out just what the supply side of crude coming out of Saudi Arabia is going to look like. A lot of data points, a lot of back and forth news causing volatility in crude oil. Semiconductors are trading near 2-year relative highs, and if they break out, that would be a bullish indication for the market in general. Dividend growth is a theme that's likely to lead the market. We'll take a look at that a little bit later in the show, and futures do point to a higher open here today. Indices from a power bar perspective, Dow down 20 bips yesterday, 4 bulls to 4 bears, so getting back to even. S&P 500, call it flat, 124 bulls to 80 bears on the power bar ratio. NASDAQ was an outperformer, 24 bulls to 20 bears. Small caps, remember I said about trends reasserting? Small caps starting to underperform again after seeing a bit of a reprieve in relative performance last week. 648 bulls to 300 bears, so the ratio looks great, but the market and model, remember, same thing with stocks. We can look at it at the index level, market and model. Small caps continue to underperform despite having a bullish power bar ratio. Bonds rallied, sending yields lower. Again, another trend that's reasserting itself. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Taking a look now at our stock of the day, auto-generated by our algorithm based on the power gauge rating. Our stock today is Reliance Steel. Ticker symbol RS, closed at 103.57 yesterday, up 41 basis points. Power gauge rating for Reliance is very bullish due to very attractive financial metrics, strong price volume activity, and positive export activity. Stock does have weak earnings performance, but when we take a look at the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating. Strong trend, strong industry group, type of name we want to consider. Let's do the work. Very bullish rating met with a stock that's outperforming. Look at this stock near all-time highs. However, one of the red flags that we look at is when a stock or an ETF is trading near all-time highs with bearish money flow. That's a warning sign to us. That tells us that investors are using recent strength to take profits or to sell the stock. So that's something we want to be aware of. At the same time, Reliance is overbought based on our overbought, oversold indicator. So we want to add Reliance to a bullish watch list because this is the type of name we want to consider owning. The timing is just not right yet. What we would like to see is an oversold position and a rebound in money flow. And then all else being equal, Reliance starts to look pretty interesting as a bullish idea, but potentially later, certainly not now, not with this tactical setup. Keep an eye on Reliance, but I don't think you need to get involved just yet. Let's look at the sector tracker now. Energy still at the top of the list based on the movement of the major sectors over the last 5 days. But look at who the next 2 spots are. Remember that rotation out of defensive areas in the market? I've been telling you all week, you didn't see it in real estate Utes. Those sectors are trading near all-time highs. Well, here they are, outperforming over the last 5 days. Real estate utilities rounding out the top 3. Materials, financials, and healthcare are also positive over the last 5 days, while industrials, tech, comms, staples, and discretionary are all down over the last 5 days. Keep an eye on tech. Over 20% of the S&P 500, it will be a key driver to the S&P's performance. Discretionaries try to show a counter trend rally of late, fading. Staples are the only group that had been an outperformer and are not necessarily reasserting themselves just yet. All right, but something to keep an eye on if investors do start to have defensive leadership. Now, our industry in focus today, healthcare equipment services, which over the past 6 months has underperformed the S&P 500 by 6.68%. Power bar ratio, which measures that future potential, is weak. 15 bearish or very bearish stocks for 10 bullish or very bullish stocks earns this group a rank of 15, 21 subsectors. Over the past 2 weeks, it has moved up. Over the past week, rather, it's moved up 2 slots. Some of the indicative names here that you want to avoid or potentially look for bearish opportunities if you trade to the bearish side. Rhythm, IRTC, Glaukos, GKOS, and Penumbra, PEN, all have very bearish Chaikin power gauge ratings. So at the very least, you know these are stocks that you do not want to own. If you do trade to the bearish side and you get an opportunity in these stocks, i.e. very bearish, underperforming the market, become overbought with bearish money flow, that's a nice setup for a bearish trade. You could potentially look for some put options or bearish put spreads there. But let's take a look at the industry group itself. XAG, the Spider S&P ETF that tracks this group, bearish rating, bearish ETF power gauge rating, and a weak trend as the fund trades below long-term trend line. Look, notice how the market is up here testing its July highs on the verge of a breakout, not testing. Notice that the July highs for this group are not all-time highs like they are for the broader market. It's an underperforming group. You can see that underperformance here in its relative strength versus the SPY being met with that bearish power gauge ETF rating. At the same time, the fund is overbought. Money flow has been mixed of late, positive now, but been mixed of late after persistent outperformance. So a bit of a change of character there. Just looks like a group you'd like to avoid for now, right? Or potentially look for bearish opportunities. There's 15 bearish or very bearish stocks here where you can dig in and do some research and see if there are opportunities to trade to the downside in those options. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Cigna was initiated by last week. Didn't see any real news yesterday to drive the stock up 2.66%. Oxy selling some assets. I guess the market liked that, up 2.6%. Alexion seeing a bit of a rebound after the CFO announced that he was leaving, up 2.6%. Align goes into a distribution agreement. sends that stock higher by nearly 2.6%. Didn't see any real news on American Tower, AMT, to account for a 2.5% rise there. Now, Sticks, Seagate, had an analyst day yesterday. Investors obviously heard some things that they did not like, sold the stock down 6.7%. DRI announces some earnings, down 5%. Noble, down 3.88%. Didn't see any real news there. Macy's down with a lot of the soft line retailers. Macy's down nearly 3.4%. Newell just weak with the consumer products group. Now let's dive in to the charts. Semis trading near 2-year relative highs. And by now, everybody should know that this chart is going to appear at least once a week in this show. SMH relative to the SPY. So semiconductors relative to the broader market. Trading up here near 2-year highs, trading up near 2-year resistance. RSI so far holding in bullish ranges as the ratio trades above a rising 200-day moving average and above a key support level. A breakout by semis to new relative highs against the market would carry bullish implications for the market in general. There's a positive correlation between this line and the S&P 500, and it tends to be leading. Notice how this ratio bottomed back in November ahead of the market, which bottomed in late December. Notice how this ratio topped out in May ahead of the market going into that dip in August, and then bottomed and headed higher, right? Tends to lead the market, but there is a positive correlation between this ratio and the market in general. And as we can see on an absolute basis, SMH trading up here near new highs. So a breakout on an absolute basis, a breakout on a relative basis by the semiconductors would carry bullish implications for the market in our view. Growth is trying to base versus value, right? This was the big story last week, was the rotation out of growth and into value. Well, here's Russell 3000 growth relative to Russell 3000 value. Still above the rising 200-day moving average, but it did break this uptrend line off of the November lows. Now, what's upsetting if you're a growth investor is the fact that for the first time in a long time, the ratio actually was able to become oversold. So now what we need to do is we need to watch how RSI reacts on a rebound. If RSI can quickly rise above the 50 mark and hold within that level on pullbacks, that would be bullish momentum and indicate that the uptrend is reasserting itself. Should we fail to get above 50 and kind of fail at an extension of this trend line break, that would be a sign that growth really is rolling over versus value. And one of the key indicators that we're going to watch is the copper versus gold ratio, right? Because this is a sign of investor concerns about growth in the marketplace, right? And copper's been lagging gold for quite some time with a bit of an acceleration beginning in April. That is a sign of global growth fears. And our thesis has been that as global growth slows, investors will pay a premium for growth, right? And that's why growth has been outperforming value to such a substantial degree, and to the degree that it did off of those November lows. But if we start to see copper outperforming gold, that would be a sign that investors are less concerned about growth and would likely rotate out of the key leading growth stocks and into some of the more beaten down value areas of the market. So it's something that we are watching closely. This ratio is something that we're watching closely for clues about equity themes that are likely to outperform or reverse. You see how it all comes together? We watch the commodity market to give us clues about what could happen in the equity market. Dividend growth as a leading theme is something that I like here. Here's DGRO, the iShares Core Dividend Growth ETF. Trading up near all-time highs following a breakout. Notice that this group has broken through its July highs, unlike the S&P 500, and it's holding above support, above a rising 200-day moving average. RSI shifting into bullish ranges, and it's broken a downtrend line against the S&P 500. If I look at it from a Chaikin perspective, 145 bulls to 59 bears. Bullish power gauge ETF rating tells me that this outperformance is likely to continue. So I want to drill down and look at the holdings of DGRO to look for some potentially bullish ideas when I come out with Activision Blizzard. Very bullish stock, strong trend, strong industry group. outperforming the market. Market and model are in agreement as the stock becomes oversold with bullish money flow above a rising long-term trend line. I'm featuring Activision as my bullish stock of the day. I hope you all have a great weekend. I will be back here on Monday. See you then.